the other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about Feb, March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026.
With current trends, crypto's most significant peak might not arrive until Q1 2026. That's the latest insight from macro expert and Real Vision CEO Raoul Pal. The global economy moves in cycles, and one key market indicator is the ISM survey, which tracks business activity. When the ISM rises above 50, it signals economic expansion and often sparks bullish trends. However, the ISM remains below 50, indicating that a full recovery has yet to begin. Pal suggests that this delay could create the perfect setup for a major Bitcoin rally. As liquidity continues to flow and institutional adoption accelerates, Bitcoin could be primed for a massive surge. With the ISM potentially not peaking until early 2026, 2025 might present a prime buying opportunity for investors looking to capitalize on a liquidity-driven crypto boom.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Inflation is the discounting mechanism, not rates.
Exactly. That's exactly, yeah. Exactly,
and so the other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about Feb, March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026. So it's a slightly different cycle, but we're just not even in the ballpark of looking for a larger top. The China game here is really clear. They cannot stimulate because the dollar is too strong and they'll break the lower bound of the yuan, right? They just can't do it. It's exactly what happened back in 2017. What they need is the US to weaken the dollar, then they can stimulate. They know it, everybody knows it, Yellen knows it, Scott Bessent will know it. That is the game. And the game is, we will not give this to you until you agree tariffs. And then they'll give it to them. And that's exactly what Trump did last time. So really, they will stimulate massively. They have to. They've got a full-blown debt deflation going on. But they can't do it without losing their currency.
So if it's not via the Fed, would it be via swap lines again, you think?
Well, they tend not to like to give the Chinese direct swap lines. So the general mechanism is you give it to Japan. So you get the Japanese to weaken the dollar. And they showed their hand a while ago when they weakened the yen. The strengthening the yen. Once they strengthen the yen, that injects liquidity into the system. The largest part of the euro-dollar market is the Japanese banks. So you need to give Japanese banks liquidity and they'll recycle it into China because they don't often like to give the Chinese direct swap lines. So whatever the mechanism is, the European banks and the South Koreans are also involved in the euro-dollar market, but it's really the Japanese. So usually you get the signal from Japan first that they start to say, we've had enough of the currency being this strong, or this weak, and then it starts happening.
Do you think away from crypto, there is still this concept of the banana zone too? Do you think macro might also decouple from crypto here a little bit though?
No, I think the business cycle's still not above 50. It will go above 50. That means corporate earnings go up, and then we get rid of that bifurcation between the tech stocks, which are cash flow driven, zero debt, and the regular economy. That gap closes because earnings grow. Earnings grow, household earnings grow. Household earnings grow, investment goes into markets. So that virtuous cycle is all the same cycle across all assets. The next phase of this, we will see the cyclical plays, the commodity plays, all starting to rally as the global economy starts to recover. So that's all to come. The ISM is still below 50.
Okay, so that would be a change from just the Magnificent Seven just dominating the stock market to everyone else. Obviously, that's been one of the main hallmarks of this current rally. So you're still predicting a very strong 2025 then for all risk assets.
Yes, I am. I don't see anything that changes that because stimulus has to be on the cards for, Europe's pretty bad.
Yeah.
The UK is not in great shape. And, we could see yield curve control in some of these countries, particularly the UK, for example.
The UK is freaking out right now.
Yeah, it's got a real problem. There's not enough liquidity in the system, which is why the bond markets are decoupling from forward-looking inflation expectations, because there's all the supply of the 4-year cycle of refinancing the debts, not enough liquidity to manage it. The other big change that happens, I think Basel IV comes into play, not in the UK yet, but in Europe first. And Basel IV, as ever, is just another backhanded mechanism for the banks to be forced to own more bonds. The UK and the US come at the middle of the year. So there's a big demand from bonds that come from this structural change as well, which helps add liquidity into the system. And also the two things he doesn't want is high rates, because he's a property guy, right? He understands he's a growth guy. So he doesn't want high rates and he doesn't want a higher dollar. So he comes in about a week's time. So the chances of this changing pretty fast. And again, I've gone through, I know Scott Bessent, he was a Global Macro Investor subscriber. I've known him for a long time. He gets what has to happen here. There was a great interview with the new guys going in the Economic Council. He just talked about, we're going to need a Plaza Accord at some point if this continues. We have to lower the dollar. And Trump needs exports because you've got the trade deficit. So everybody has to get the dollar lower. And all he did last time in 2017 was right at the beginning. As soon as he came in, he said the dollar needs to weaken. He already said this week rates are too high.
With ISM surveys still below 50, Pal views 2025 as a prime year for risk assets to thrive. Meanwhile, China is struggling with debt deflation, heavily influenced by the strength of the US dollar, as its economic growth relies on US trade. Pal predicts that liquidity injections, fiscal stimulus, and regulatory shifts, such as Basel IV, will drive a synchronized market recovery. As the Federal Reserve moves closer to rate cuts and new forms of quantitative easing, liquidity remains the key driver of growth. Now let's turn back to Raoul Pal for more insight.
So I think the Fed will continue to cut rates, and that's okay. But really, it's down to the US injecting liquidity to weaken the dollar and jawboning it lower. Because if the Fed come in or the Treasury come in and say, we believe in the strength of the dollar, but it's too high for growth right now, whatever, that's enough to turn market participants nervous. And then all you need to do is inject liquidity through various mechanisms to force that to happen. Don't forget, we got a $700 billion drain of the TGA to come as well. We've just drained the reverse repo. So they're going to have to stop QT as soon as they finish the reverse repo, which will be by kind of Feb, maybe. So then you're ending QT, injecting liquidity from the TGA. They've already mentioned, who was it? I can't remember who it was. I think it was Powell at the last Fed meeting said, we don't want to have to tighten liquidity on the rebuild of the TGA. That was a signal everyone missed. He said, we understand draining the TGA is liquidity into the system, but we don't necessarily want to tighten again once we have to rebuild it. So that's telling me it's probably QE. Now, Maybe it's not QE, maybe it's QE by a different name.
And do you think tariffs will actually happen then? They'll just do deals? Feels like that's what kind of happened largely with the first administration.
Yeah, and the tariffs will be scaled, so they won't be as big, and they take time. But I think because Trump is actually a good negotiator, a good deal maker, he will try and get some early wins. And so he'll get some early wins in exchange for the dollar, that whole idea, and then say, if it doesn't happen, we're going to keep increasing tariffs. So there'll be some sort of ongoing stick to beat them with to try and readjust these deficits. So yeah, I think it won't be as big as people expect. That's what happened last time as well. It takes time. And the other thing we know about Trump, which is really interesting for 2026, is they're going to go all out to not lose the midterms, unlike probably any party we've ever seen, because we've got all these tech accelerations tech accelerationists in power, and they need the Congress and the Senate. So they're going to bribe the voters in every way possible to show victories. So it's very interesting. I think 2026 may be somewhat different than we expect. It's probably a down year, but probably a lot milder because they have to win the midterms.
Arthur Hayes projects maybe up to $600 billion in further liquidity by the end of April, and then that's it. What do you guys think?
So that's what he's doing, is thinking about the draining of the TGA. And again, it's not US liquidity that matters, it's global liquidity. So I disagree, because China needs liquidity or it's going to implode. It's literally going to implode. So you kind of know when you see the bond yields doing that in China, it's telling you that liquidity is the single most important thing.
Well, Japan, everyone said, robotics was going to be their savior. Now everyone's talking about AI, maybe be the savior for China. Do you think they can be saved in that way?
Yes. I mean, that's why they're putting so much money into AI and robotics, because it solves your labor force problem. I showed the chart and I call it the world's greatest macro chart, and nobody understands this, is if you just take the labor force participation rate in the US and put the debt to GDP against it, inverted, they're the same chart. So all the debt is a function of demographics. It's the same with China. The only way of solving this is AI and robots, unless you get everybody to have 17 kids, which ain't going to happen. And that still has a 20-year lag before they become productive units. So yeah, and Japan is doing this too. They're right at the forefront of robotics as well. I mean, China's robotics is scaling at a terrifying speed.
Arthur Hayes, former CEO of BitMEX and now Chief Investment Officer at Maelstrom, has updated his cryptocurrency market forecast. He now predicts a peak in March 2025, fueled by a surge in liquidity from U.S. Treasury spending and a reduction in the Federal Reserve's reverse repo facility, which could inject up to $612 billion into the economy by the end of Q1. This influx of cash is expected to counter any disappointment regarding the new administration's pro-crypto promises, including Trump's proposed Bitcoin reserve. After an initial market correction late last year, Bitcoin has already regained momentum, rising 5.5% in early January and pushing the total crypto market capitalization to $2 trillion. Hayes believes this favorable liquidity environment will continue to support Bitcoin and other crypto assets, with price projections ranging from $150,000 to $250,000 by late 2025. While he remains bullish in the near term, he warns of potential challenges later in the year, such as debt ceiling debates and shifts in monetary policy from Japan or China. Still, he sees the current conditions as a prime opportunity for investors willing to take risk. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.